Hey guys, welcome. It is Father's Day, June 15th, 2025, in preparation for Monday, June 16th, 2025. All right, we're going to continue, actually kind of finish up here with Larry Height on the Market Wizards interview with top traders, Jack Schwager. Um, let's see. All right, you trade a very wide variety of markets. Do you trade them all the same way? Larry Height said, "We do not trade markets, we trade money." Mickey Quinnington, who is our marketing director, once introduced me to a former chief executive of this firm, which EF Mann, the firm to which Height gave 50% ownership in his management company in exchange for financial backing. This guy was a tough old Irishman, and he asked me, "How do you differentiate between gold and cocoa in your trading?" And I answered, "They are both a 1% bet. They are the same to me." He was outraged. He practically shouted back at me, "You mean to tell me that you don't see any difference between gold and cocoa?" I think if it wasn't for the fact that he liked Mickey so much, he would have thrown me out of his office. I married a very proper English woman who is always concerned that her family considers me a bit crass. I was once interviewed by a reporter of the London Times who asked me what I thought about the future direction of the London cocoa market. And I told him, frankly, I don't see markets. I see risk, reward, and money. I was the last person quoted in that article. He finished it by saying, quote, "Mr. Height does not care about the cocoa market. All he cares about is money," end quote. My wife read the article and said, "Great. Now I'll never be able to go home. This will just prove to my family that they were right about you all along." Um, that's kind of funny. Jack Schwager said, "I assume that you trade all markets the same. You probably do not believe in optimization." Um, he said, "Absolutely. We have a saying here. It is incredible how rich you can get by not being perfect, by not over optimizing." He said, "We are not looking for the optimum method. We are looking for the hardiest method. Anyone can sit down and devise a perfect system for the past." Schwager asks, "Are there any technical indicators that you have found to be overrated?" He said, "Yes, overbought and oversold indicators. None of them seem to prove out in testing." Which I agree with that. Oh, it's overbought, it's got to turn. Well, nope, not necessarily. It can stay overbought for a long time and it can stay oversold for a long time before it finally turns. Any type of indicators that you consider particularly valuable? He said, "Although I do not really trade off them, there are two that comes to mind. First, if a market does not respond to important news in the way that it should, it is telling you something very important. For example, when news of the Iraq and Iran war first came out over the newswire, gold was only able to move up about $1. I said to myself, huh, a Middle East war has just broken out, and the best that the gold market can do is go up $1? It has to be a great sale." The market broke sharply after that. The second item is something that Ed Seykota taught me. When a market makes a historical high, it is telling you something. No matter how many people tell you why the market should not be at that high or why nothing has changed, the mere fact that the price is at a new high tells you something has changed. Any other lessons that you had learned from Ed Seykota? Schwager asks. He said Ed Seykota actually explained his philosophy one day. You can risk 1% of your capital, you can risk 5%, or you can risk 10%. But you'd better realize that the more you risk, the more volatile the results are going to be. And he was absolutely right. Besides your partners, who I know were who were integral in developing your trading system, were there any other traders who taught you valuable lessons? He said, absolutely. Jack Boyd. Um, Skip down here. Jack had been putting out trading recommendations for his firm for many years. I found that if you followed all of his recommendations, you would have made money in every year. Finally, I asked Jack how he did it. You have to picture that Jack was a 6'4". Jack was 6'4". He said, "Larry, if you want to know where the market is going, all you have to do is this." And he threw his charts on the floor, jumped up on his desk, and he said, look at it. It will tell you." Jack Swagger said, "I assume by that he meant get a perspective of the bigger picture." Larry Height said, "Right, because I don't know of too many people who get rich by taking small profits. Working with Boyd was extremely important for me. From the time I met him, I knew that his approach was the right way to do it. In other words, I knew that if you traded across the board, controlled your risk, and went with the trend, it just had to work. I could see it absolutely clearly. Any final words? Schwager asked. He said, I have two basic rules about winning in trading as well as life. Number one, if you do not bet, you cannot win. Number two, if you lose all of your chips, you cannot bet. Very, very important there. Okay. Heights, the summary here by Jack Schwager. He said height controls risk rigorously by applying four basic principles. Number one, his system never trades counter to the market trend. There are no exceptions, and he always follows the system. Buddy, that reminds me of your type trades where you're following those short-term trends. You're going in the direction of that trend, and I think that's absolutely awesome. Number two, the maximum risk on each trade was limited to 1% of the total equity. Number three, Mint, which was his hedge fund, carries diversification to an extreme. There was more on that, but we'll just stop there. Then number four, volatility is continually tracked in each market in order to generate signals to liquidate, temporarily suspend trading in those markets where the risk or reward exceeds well-defined limits. One final observation, after merely earning a modest living at some colorful careers, like, for instance, Larry Hite was a scriptwriter, an actor, and a rock promoter in his earlier days, which it covers in the early part of the chapter, but I didn't go over that part. But scriptwriter, actor, and rock promoter, Larry Hite succeeded spectacularly in the single endeavor for which he had the greatest enthusiasm, hedge fund manager. I found this to be a striking example of Ed Sekota's comment. It is a happy circumstance that when nature gives us the true burning desire, it also gives us the means to satisfy them. Okay, we'll jump into the tonight's homework. Did want to look at the daily here. Boom, boom. Okay, so by the way, all the charts I'm going to go over here tonight are on the ESM, which is the June contracts, which expire at the end of this month. The options expire at the end of this week here, but then they expire at the end of the month. So everything I'm going to go over on my charts is the ESM. However, we are looking for the this week. This week, the VIX expiration is on Wednesday, I believe it is. Option expiration on Friday and the end of the month, and the front month rollover here. We're getting ready for that right now. But anyway, just because it has more data, I'm using the ESM chart for my examples tonight. Okay, so we did a nice push down, but the reality is, look what we did. All we've done is bounce off this 20-period moving average. Let me get back here. So this move up here, this is a bounce off the 20-period moving average. This is a bounce off the 20-period moving average. And then Friday was another bounce off that 20-period moving average. So in the bigger picture, that's all we've done. Also on the LBR 310, I've pointed out this example here that, hey, try not to short this type of environment here. And right now our slow line actually kind of dipped up a little bit, but we'll see what that how that plays out. Just interesting picture that I just wanted to be aware of, to have us all cautious of, not get too overly bearish unless the market continues to show us that. Okay, so we had the 20-period moving average bounce there. Also, we've got on the 60-minute. So the 60-minute here, this was that Globex price action that just shot down overnight in the Globex. So far, we kind of put in a little bit of a higher low on this seemingly divergence here. But I wanted to jump back here to the 15-minute, and you can actually see that it is a true divergence on the shorter time frame, where up here we came down in here, and then we made this new spike low on better true divergences here. So on the short time frame, the 15-minute, it does look like we have that divergence. This was that price action from before. But we've done like an A, B, C spike. Now that doesn't mean we can't eat down into this tail a little bit more. But I'm just cautious about that given what's showing on the 15-minute chart here. All right, let's jump over to my internals. Again, we have VIX expiration this week, so keep that in mind. This is where we were seeing that little bit of bearish divergences show forth in the VIX here. Sure enough, it's kind of played out. Friday, we've kind of jumped a pretty good extreme. The lows here from the 11th, what was the 11th? That was on a Wednesday. Wednesday lows, Thursday, Friday. So Wednesday's lows was 1623 on Friday when we got above that 1923. Keep in mind this, the 3-point move up in the VIX equals a greater probability of a sell-off, whereas a 3-point down is a greater probability of a buy. Sure enough, on Friday, we had a good sell-off here take place. Now, I think we kind of had to wait until that morning push was done, but that is what the result was. So it's always good to see that this premise continues to reinforce and continues to play out. Like I said, I just kind of have a note. We may have traveled too far too fast. The highs of this was at 22, so I went ahead and marked 19. If our VIX is back down below 19, then that could be three points down, potentially greater probability of a buy opportunity, if we move back down there. All right. The trend. Let me go back to the trend here. The trend here, this again, just keep in mind, remind you guys of what I have on my notes here. The trend above 2.0, higher probability of a rally, below 0.6, higher probability of sell-off. So Friday we were below this 0.5, not only below 0.6, but we were below 0.5. Higher probability of a sell-off. Well, look where we end up closing on the day. We end up coming up and end up closing up on the day there. This is a daily chart. So that's just kind of a cautionary, interesting, like, hey, we were down below that. The sell-off did happen on Friday, but yet we closed back up above that. So that's just interesting. Also on our breadth, we end up closing down pretty good on the breadth, negative 1792 on a daily basis here. So breadth was pretty extreme all day. Again, is it going to take a breather? Now, is the breadth going to take a breather on Monday or not? Okay, so I wanted to look at this gap overview here. We'll start with the 15-minute version of this. So on the 15-minute version, this is here where we had those Globex lows that spiked down here. Then we came up here. We've done like basically a partial gap fill. If you kind of run about 50% roughly of this box here, we've done about a 50% fill. Now that could result in further upside. However, if we wake up tomorrow morning and our pricing is down in here, then that could paint a different story. If we end up opening anywhere close to this 50% zone, it'd be curious to see where that is. So right now price is at 59.87.75, 59.87, 56.87. So right now our price is above that. So that's interesting there. I'm sorry. Oh, and also on this 15-minute. So on this 15-minute chart, I would expect, based on this trickle off here, I would expect for us to test at some point, come back up and test that moving average on the 15-minute. If we open up above it, if we come down and test it, it does not necessarily have to come back down. But at some point, I would expect us to test that 15-minute moving average. The 15 MA. Look at the gap. We looked at the gap, that 50% gap fill. All right, so now let's glance at this on a 60-minute chart version of the intraday. We still have these other gaps below here, but again, just looking at where we are here, we've done this little 1, 2, 3, 4, 5 type pushes here, or A, B, C, D, E. Are we done on this E, or are there further downside potential? We'll have to wait and see where we open up tomorrow morning. Now I have okay, let me go to my multi-time frame. I'm going to keep an eye also on my 5 minute dot D chart to see if we're opening outside the lower, the lower bands of the Bollinger Bands down here below 59, 56, or are we opening up above that in the 60, 42 zone? Again, right now, our price is at 59.87. So right now we're kind of in the middle, kind of the middle of this Bollinger Band. 59.87. Oh yeah. Oh, which is exactly where it looks like it closed there on Friday. So we're basically right back to where we closed. So a couple things to watch there, guys. I'm sorry I don't have a overwhelming direction. I think there could be a lot of crosswinds this week coming into Tuesday, Wednesday, and Thursday even. Well, even tomorrow, Monday. Quite honestly, we could have some crosswinds. So be careful. Take what you get. And happy trading. We will follow up tomorrow night. Thanks.